What if I told you the top 0.1% don't invest the way you think they do? Today, I'm breaking down 3 powerful strategies the ultra-wealthy use to grow their money, and how you can start using the same framework, even if you're starting with just $100. Watch until the end, because I'll give you a simple action plan you can follow this week to start investing like the 1%. Welcome to Future Finance Lab. If you're new here, this channel is all about making the future of money, investing, and AI-driven markets simple and easy to understand. Just a quick disclaimer before we start. This video is for education only. Always do your own research or talk to a licensed professional before investing your money. Now, let's break down how the top 0.1% actually invest. Strategy number 1. The 1% think in decades, not days. Most people are asking questions like, should I buy this stock today? Or, is the market going to crash this month? But the top 0.1% ask a very different question. What trends will dominate the world for the next 10 to 30 years? Let me give you a simple example. Back in 2010, a lot of people were trading short-term moves in random tech stocks. But the wealthiest investors were quietly buying into long-term themes like artificial intelligence, cloud computing, and mobile technology. They weren't just buying a hot stock. They were buying the infrastructure of the future economy companies like Microsoft, Amazon, and Google that power software, data, and AI. So how do you apply this today as a beginner? First, focus on megatrends, not hype. Right now, some of the biggest long-term trends are AI and automation, renewable energy, cybersecurity, and healthcare innovation. Second, instead of guessing individual stocks, you can start with simple ETFs that track these sectors, or broad index funds like the S&P 500. The mindset shift is this: stop thinking, how do I double my money this year? And start thinking, what will still be strong 10 to 20 years from now? That's how the 1% think. Strategy number 2. The top 0.1% don't just pick good investments. They build a smart mix of investments. This is called asset allocation. Most beginners either put everything into 1 or 2 stocks their friend mentioned, or keep all their money sitting in a checking account. The 1% do something very different. They spread their money across different buckets so that no single mistake can destroy their wealth. Here's a simple version you can use. For example, if you have $100, you could put 60% in a broad US index fund, 20% in sector ETFs you believe in like technology or healthcare, 15% in international funds for global growth, and 5% in cash for safety. As your money grows, you can adjust these percentages, but the idea stays the same. Don't bet everything on one thing. Here's another secret. They rebalance. Once or twice a year, they check their portfolio and bring it back to their original percentages. If your tech investments grow really fast and become 40% of your portfolio instead of 20%, you sell a little and move that profit back into your other buckets. This keeps your risk under control. And finally, they invest regularly. This is called dollar cost averaging. You invest a fixed amount every week or month, no matter what the market is doing. This smooths out the ups and downs and keeps you from trying to time the market. Strategy number 3. The 1% think like business owners, not gamblers. Most people treat the stock market like a casino, chasing hot tips and get-rich-quick plays. But the ultra-wealthy ask a different question. If I could buy this entire company, would I want to own this business? When they invest in a company like Apple, they're not just buying a ticker symbol. They're buying a real business that sells products people love, has strong cash flow, a competitive advantage, and can grow for many years. Here's how you can copy this mindset. Before buying any stock, ask yourself 3 questions. What does this company actually do in simple words? How does it make money, and is that money growing? And do I believe this company will still be strong 10 years from now? If you can't answer those, you're not investing, you're guessing. Then, pick just 3 to 5 companies or ETFs you truly understand. Study them. Understand their products and their competition. Once you've done your research, commit to holding for the long term instead of panicking over every red day. The 1% get rich by letting time do the heavy lifting. Let's turn this into action. This week, do 3 things. First, write down 3 long-term trends you believe in for the next 10 to 20 years. Second, build a simple allocation plan, even if it's just on paper for now. And third, choose 3 to 5 companies or ETFs to study like a business owner, not a trader. If this helped you understand how the 1% really invest, hit like, subscribe to Future Finance Lab, and share this with someone who keeps trading but never actually builds wealth. Comment below, which of these 3 strategies are you going to start with? I'll reply and help you refine your plan. Thanks for watching.